Good morning, everyone. Thank you so much for joining us today. It is the 6th of April, and we were already talking about how quickly this week has gone by and the year is going by, and we're so grateful that you're here. This is a holiday week for many people, and for those of you celebrating Passover and Easter and Ramadan and all the other spring holidays that come up, we wish you a wonderful holiday with peace and joy, and thank you for taking some time out to join us. Today, we have a guest presenter. His name is Dave Kempton, and he is with Catalina Capital Group. His company works very closely on 401ks and other retirement programs. He works closely with small businesses, nonprofit organizations, government municipality organizations, and he provides complex and innovative retirement plan solutions. Their goal is high quality, give you a financial roadmap for individuals and for businesses with 401ks, 403bs, and other retirement plans to appeal to the employees, and also integrate seamlessly into your day-to-day operations. He'll be explaining to you more and more about these programs, but as we all know, having a great program of retirement will keep your employees happy. They won't be jumping ship for a couple bucks an hour. They're going to say, well, wait a minute, I've got this retirement plan and I've got employee benefits and I don't want to leave. So you're really encouraging your employees to stay with you when you offer these plans. So with that, I'm going to let Dave take it away. And Dave, tell us a little bit about you when you're not doing wonderful things for employers.
Sandra, thank you so much. And thanks for the great introduction. Great to be with all of you. And I'm just super excited to share some things on finance and money with you. We've got some great topics, which we'll dive into here momentarily. But a little bit about me. Like Sandra said, we are a wealth management, financial planning, and 401k, most excitingly, a 401k firm, helping business owners reduce taxable pay is one of the things that we're going to talk about as well in more depth. But I am from Phoenix, Arizona originally, and have lived in San Diego, for a long time, for about 25 years, and just love talking with businesses and their employees really about anything money or financial related. So if I could, we'll just jump right in. I want to just a special thank you to PayrollCentric and to Sandra and to the entire team at PayrollCentric. As you know, they really specialize in payroll, HR, time and attendance. You may also know that they specialize highly in workers' compensation, labor law compliance, and ACA compliance. So if you're not utilizing PayrollCentric for any of those things, talk to Sandra, talk to your team at PayrollCentric. We work with a number of you and really enjoy the partnership. So thanks again for having me, and let's get started. By the way, feel free to jump in anytime with questions. I love when people ask questions. It's a little bit more interactive. It keeps things more exciting. And so, feel free to unmute yourself at any point and ask questions. We'll also have time at the end for some Q&A. I would expect this to last between 30 and 40 minutes, and then we'll have as much time as you'd like for questions. All right, so what's on the agenda today? We are going to talk about three topics, high level, by design. It's really meant to introduce or remind of these great topics with respect to financial and money. The first topic is college savings. It's getting more and more expensive, colleges. And so a college savings 529 plan is a phenomenal way to grow money tax-free and use all of those earnings tax-free to pay for college. We're also going to talk about cybersecurity, hot topic. We've all heard it. but it's just becoming more and more important to at least have some familiarity with cybersecurity, specifically for the service providers that you work with. Reducing taxable income. We're kind of in the midst of tax season, both on the personal side as well as on the business side. So we've got some great strategies that we wanted to share with you for reducing taxable income, specifically for key employees and business owners, and then also a creative way to set up or structure a 401k plan with some other neat nuances to that as well. So college savings plans, everyone has probably heard or maybe even used a 529 plan. If so, this may be just kind of a review. If you haven't heard of, or if you haven't had the chance to learn much about 529 plans, we'll talk about some of the three main important topics on the 529 savings plan. So it's really what a 529 plan is it's utilized to save for a student's college education. It can also be used to pay for graduate school or degrees, as well as continuing education courses. So what does it cover? When you put money into a 529 plan, one of the biggest benefits is that it will grow tax-free. So all of those earnings, instead of paying tax on them each year like you would in a typical investment account, the money grows tax-free, and when you take it out, you pay no tax. So it can be used to cover tuition. It can be used to cover room and board. Room and board is a huge, huge expense. We just went through this process a couple of years ago with my niece, and it was pretty eye-opening when trying to figure out, okay, what's the overall cost going to be all in? Because you can also use this money to pay for laptops, supplies, books, you name it. I want to also mention two tools that are free that you can utilize. They're on the BlackRock.com website. You guys have probably all heard of BlackRock. It's one of the largest, if not the largest, investment firm in the world. They are known for their mutual funds, probably most notably, and specifically their low-cost index mutual funds. So if you go to BlackRock.com, two tools. One is a comparison tool where you can drop in various 529 plan accounts with various financial institutions. And as you may know, you can probably find a 529 plan anywhere, whether you go to Fidelity, whether you go to Vanguard, whether you go to E-Trade, your bank, TD Ameritrade, Schwab, all big financial firms you've heard of. You can compare 529 plans, and all are not the same, specifically from state to state. So depending on which state you're in, that may be a big differentiator in terms of which 529 plan you choose. The second tool is a college savings estimator. So if you are just trying to figure out how much do we need to save for college, BlackRock has another tool which will help you estimate what those costs may be overall. And then what I'd like to end with on college savings 529 plans is what the key benefits are. And I've mentioned these. So really, when you put the money in, it will grow tax deferred. From federal taxes, depending on which state you're in, it can also grow tax free from a state tax perspective. One other key thing as we wrap up this topic is you may have the flexibility to transfer if you've saved in a 529 for one child and you want to transfer those dollars to another eligible relative. So just know that there is some flexibility there. I'm going to, as we kind of dip back into cybersecurity, I'll pause here just for a second for any questions on 529 plans. Any questions there? And just know, if you'd prefer to type a question into the chat box, you can do that. And also we'll have some Q&A at the end.
I just want to mention, Dave, I used the 529 plan to put 2 kids through college. My son went to University of Wisconsin-Madison. It was $90,000 a year. Were it not for that, we would have been bankrupt. And I'm not kidding about that. And then there was a little left over, so I was able to put my second child through school. So it really is a very good idea. We started as soon as those were available. My son with his new child is starting it at birth, so that when the time comes, the money will be there. And you don't miss it. Trust me, you don't miss it. It's like a Starbucks charge. So I encourage you to talk to Dave about doing that.
Thanks, Sandra. It really is a phenomenal tool. As we all know, the IRS always wants their cut. There are very few ways to navigate around that. A 529 account or 529 plan is one way. And as Sandra mentioned, the biggest advantage you can have is time. So if you can start as early as possible, earlier the better, you'll be much better off, because you're allowing more time for those monies to grow. And because of that compounding nature, they're growing tax-free. It just grows exponentially over a period of time. So sooner the better on that. And thanks for the shout out, Sandra, again. All right, let's talk about cybersecurity. We hear this term all the time. We read about it. It's in the news. When you look at what cybersecurity experts are saying on all different levels, whether it's governmental, whether it's in the business sector, or even on the personal side, because we think of identity theft, generally speaking, it's because of some type of flaw within cybersecurity, specifically on the business side. And that's what I really would love to focus a few minutes on, is just being somewhat informed about cybersecurity, and specifically what questions to ask when working with a service provider. So hopefully, from a business side, you guys are set. I'm sure you're constantly reviewing that. Maybe somebody within your IT group is really on top of latest updates within cybersecurity. But one thing that I find that sometimes businesses may overlook is your security is only as good as the partners that you work with. And specifically on the retirement plan side, on the 401k side, we will often help clients or help you evaluate another 401k service provider's cybersecurity. But this really can be utilized with any service provider, not just on the retirement plan side. There's some great standards and practices and policies that the DOL, the Department of Labor, have put out. And in fact, this is directly where this information is coming from. I'll also share a link to the DOL's website for those that are interested in just a little bit more information. It's just a really good blueprint for as a business owner or somebody running a business, somebody within the executive team to follow when working with a service provider. So let's dive in. Really just 5 things I wanted to touch on here. And again, like I mentioned, it has to do with a specific standard or specific questions that you can ask a service provider that you work with. Again, this can be used uniformly with all different types of sectors or industries within the business community. So as we start off, let's talk about these 5 points briefly, and then the DOL's website has some more information that really delves deep into each of these questions. So the first thing is you want to look for service providers that follow a standard or security and that have an outside or third-party auditor to review and validate cybersecurity. So let me share a little bit more on this first one. When working with a service provider, what you want to look for is somebody that is also using a third party to help validate their cybersecurity. So it's not just that service provider saying, yep, we're good. We have software in place for cybersecurity, and rest assured, nothing to worry about. You want to ensure that they're using a third party that is also auditing their practices. Second, ask a service provider how it validates its practices and what levels of security standards it has met and implemented. Again, most service providers that you work with, and it can be really anyone, they should have these security standards in place and available to share with you. Particularly this day and age, because so many people are asking about it. Number three, ask, has the service provider that you're talking with, have they had any breaches? And see if they'll share with you what happened, how the service provider responded, and what they've done to fix or backfill that potential breach. Number four, find out if the service provider that you're working with has any type of insurance policy that would cover a loss due to cybersecurity. That's a big one. Most providers do have such policy in place. And then fifth, last, when you contact a service provider, make sure that the contract requires ongoing compliance. So whenever we work with a service provider, typically we're signing a contract that spells out all the services that are offered. Just ensure that there's some type of ongoing compliance with cybersecurity. All right, I want to pause here. Any questions on cybersecurity? Just know we can help. If anyone has any general questions, we can help you navigate and certainly pull in additional resources. We are not cybersecurity experts, but we can help ensure that you're working with a service provider that has policies, practices, standards in place to ensure that you're safe and that your company's information is safe. All right. Let's pivot a little bit to reducing taxable income. And really, we're doing this by utilizing very strategic and customized strategies on the retirement plan side. So 401k, you've all heard of 401k, or have a 401k, or have participated in a 401k before. But this is really stacking an additional retirement plan on top. Think about a peanut butter and jelly sandwich. We all know that great taste from childhood. Really, you've got 401k, and then you stack a pension plan or defined benefit plan on top of that 401k plan. Why would you do that? Because the IRS has much higher limits on what you can put into that combo, that sandwich of retirement plans versus just one. So we'll talk about that. I also do, it's not on the agenda, but I would also like to talk briefly about another topic, and it's really just to mention research and development tax credit, and then the employee retention tax credit. If I were to guess, I would imagine all of you or most of you have probably heard of the latter, the employee retention tax credit. If you haven't taken advantage of that, really retaining some or all of your employees during COVID, there's a tremendous benefit to looking into it because you could still be eligible for a tax credit there. Who do you talk to? Talk to your CPA. If you've already done that, consider talking to your CPA about the research and development, the R&D tax credit. We just referred a client that is in the garment space in LA, Los Angeles. Their CPA had not taken advantage of the R&D tax credit. We introduced them to an R&D tax credit CPA firm that just specializes in that. And then they'll work with the client's existing CPA. And they got a tax credit back, a refund back of over $200,000. It can be big. Every company is a little bit different. The moral of this is just ask your CPA, are you aware of R&D tax credit? Are you aware of the employee retention tax credit? If they say no, reach out. I can get you in touch with a CPA firm that can work with your CPA just to evaluate whether you may be eligible. Again, just a topic that any business that I talk with, I just always throw that out there. It doesn't have anything to do with us or our firm, but I just want to make sure people are aware of it. All right, because we love tax credits, right? All right, so let's pivot back to reducing taxable income utilizing retirement plans. I realize that there's a lot of numbers on this screen, but let me walk you through the way that this is organized. This is looking at IRS limits for this year, 2023. And so this is looking at a specific business owner or key employee with a specific age, because age really drives how much you can save, not only in a 401k plan, but also in that sandwiched plan, the cash balance or defined benefit plan. We'll just spend a few minutes on this. If you'd like some more information, reach out and we can delve into this even further if you'd like. All right, so at the very bottom of the screen, it starts with age 50. If you're younger, can you utilize a structure like this as a business owner, as a key employee? Yes, you definitely can. But because there's so much information and data on this one screen, I wanted to pare it back and just start with the age 50. So if you're a business owner, if you're a key employee, or if the company you work for could benefit from this, this is how it works. So if you're age 50, down at the bottom, in a 401k, individually, you can save up to $30,000. So that's a 401k only. If you're age 50 and you have 401k and profit sharing, so that's the employee piece is $30,000, and then the company will put in matching or profit sharing. That individual can be credited with $73,500 annually for 2023. Here's the kicker. If you're a high wage earner and you're trying to reduce as much of your taxable pay as possible, and if you add a defined benefit or cash balance on top of the 401k, it's that peanut butter and jelly sandwich, you can save an additional $188,000 just for that one person, for a total of $261,500. So let's use an example. Often, established business owners, professionals, lawyers, CPAs, accountants, architectural firms, just high wage earners. It really is not industry specific. But if you're a high wage earner and say that the taxable income for that business owner or key employee is $500,000, you could reduce that $500,000 by $261,000. And as you know, if you're in a high tax bracket, say you're in, a 35, 40% federal, 10% state, that $261,500, if you put that into a retirement plan, you have an approximate tax savings of $130,000 of tax savings per year. Now, as you can see, as you go up the screen, let's go to age 60. If you have a business owner or a key employee that's age 60, 401k is the same. $30,000 is what the individual saves. Additional company contributions that go in, like matching or profit sharing, up to $73,500 for annually. That individual could save or defer $309,000 of income for a total of $382,500. These are just the maximum amounts. I have clients come to me regularly and say, Dave, this is great. I'm age 60. Yes, I want to put $73,500 in in the 401k profit sharing. The additional sandwiched option, I don't need to do $309,000. I just want to do an extra $100,000. That's okay. This is just to illustrate the maximum amounts based on your age. This is a phenomenal tool to reduce taxable income. Most of our clients are utilizing some type of combination retirement plan like this. If they are cash flow positive or high income earners, we will often work with your CPA very closely to figure out what's best here, because although we're managing retirement plans, we really need that tax expert to weigh in as well. So we often work very, very closely with your CPA on this. So I want to pause there just for a moment. Any questions specifically on this retirement plan structure, this creative structure to reduce taxable pay? And then what I'd also like to do is just a short recap here. So tax credits, first and foremost. Talk to your CPA about research and development and the employee retention tax credit. If you've already utilized one or both, awesome. You are ahead of the game. If you haven't utilized both or one, talk to your CPA. 529 plans, really, really great tool to save for college tuition, college expenses in general. Cybersecurity, a great blueprint on the Department of Labor's website. We'll get you the link to that comprehensive section of the DOL's website for cybersecurity and just what questions to ask your service provider. Feel free to use me as a reference or a resource on any of these topics. My email and phone number are listed here. And then also, lastly, reducing taxable pay. We've got some really creative structures to, if you've got an existing retirement plan or 401k, to tweak it, or if you don't have a retirement plan in place and would like more information there, we'd love to help and be a resource there as well. All right, so I would like to just open it up. If anybody has any questions, I want to also leave contact information here. If anyone would like to reach out individually or just have an individual conversation. And I also do not want to end without, again, thanking Sandra and the team from PayrollCentric for having me. It's been great to be with you and spend a little bit of time with you this morning on the heels of a holiday weekend and a holiday week. Thank you, PayrollCentric. And any questions? Yes.
Is there anyone has anything to add or ask? Some of you on this webinar might not be decision makers when it comes to retirement programs. So what I'm going to recommend is that once I put the link up on the YouTube channel, as well as send you your invitation next week, you might want to forward that link and Dave's deck to the owner of your company. If you don't already have a 401k, now's the time to have a look. Also, there's the Cal Savers program, as many of you know, is a requirement. And we did do a very extensive webinar when Cal Savers first began. So you might want to look in the archive of our PayrollCentric presentations channel to find that. Megan did a great overview of what that was all about. And as a matter of fact, we just completed the CalSavers reporting program with Darla, working long hours to get all of that done. So PayrollCentric can assist you with that. There might be the elephant in the room where you're going to say, well, how about PayrollCentric? Is our data safe? Yes. All 5 of those items on Dave's slide, we can check mark as yes, we do, yes, we do, yes, we do. So please rest assured we're payroll. So we have to be very careful with your data. So know that you are covered, and it's not just a very simple wall. We've got big ones. So not to worry about that. I don't see any questions in the chat. If you would like to unmute yourself and ask a question directly to Dave, I'll give you a moment to do that. I'll stop talking long enough for that to happen. And then before we go, I'd like to tell you what things are coming up. Anybody?
Great.
Well, my goodness. Okay. So with that being said, Dave, awesome, really good presentation. Thank you. It was so clearly stated. It was so easy to understand. And I really appreciate you taking the time to not only prepare your presentation, but to spend the time with us today to provide us with some really valuable information on 3 very important topics. So thank you for that. We'll have you back again so that we can talk more about retirement programs. All right, things to come. Guess what? Next week, Charles will be back with us, and we're going to be revisiting deductions, because when you get that 401k plan, you're going to have a deduction for it. So Charles is going to show you how we get that done. And then we're going to do a deeper dive on how you prepare your reports, how you report information to your CPA, how to get all of that taken care of using the DASH system. Our system's very robust, and many people don't know how many whistles and bells and tips and tricks that we have. That's why we break it down into bite-sized pieces so that we can give you the most information so that you can take full advantage of what you are getting because you do payroll with PayrollCentric. Then we have a guest presenter on the 27th. My friend, Amanda Luftman. She is the most amazing human being. She's full of energy and full of fun. And she is the managing partner at Bourne, Osher, and Luftman. It's an arbitration, it's a labor law attorney, and they are really well versed in everything that's going on with labor law. It changes all the time, and she's on top of it all. She's going to specifically talk about arbitration agreements as well as separation agreements, meaning if you've let somebody go, you need an agreement. She's the one to talk to make sure that it is all correct and complies with the law. So I trust her with everything. She's one of those people that when you have heard her speak, you're going to want more. She is well-versed. She's fun. She gives all the information you could possibly want and then some. So please mark your calendars and also forward that invitation to perhaps the owner of your company, because this will affect them for sure. All right. Well, it looks like we're going to end a little early today. You're going to get some time back in your day. Dave, again, thank you so much. It's wonderful to partner with you on 401ks and other related items. You are so trustworthy and so wonderful to work with. So I want to thank you very much for what you do for us. Everyone,
thank you, Sandra, and thanks, everybody.
You're welcome. Thank you, everyone, for joining us today. And as we said at the beginning, have a wonderful holiday and enjoy your family and friends. And I hope that all is peaceful and wonderful for you all. Have a great day. Bye-bye for now.